Hello. So today I just wanted to go through briefly some of the crypto accounting basics. This one being month-end asset revaluation and just how to record the cost basis for digital assets. It's all pretty simple. It's the same as what you would do with any kind of equity or the like that has a quoted open market. I just wanted to go through because everyone has their interpretation, and if there's any other differences that someone else is doing, I'd love to see it. But so in this example, we'll keep it pretty simple. Digital asset, we'll look at maybe something like Matic that has some volatility. Chain, obviously on Polygon. Date received, we'll give an example of we had an outstanding invoice to a customer. They paid their invoice in Matic, and we received that on the 2nd. Amount received 1,000, and this was the price on the day that we received that invoice. So your initial entry is very simple. It's obviously just your amount received times your price. That's what you record your digital asset as. And here I'm just making the assumption that the AR balance is the same as what we received. Then let's say on the 15th of August, so let's say we received this first on the 2nd. This is our cost basis now for 1,000 Matic. It's 877. On the 15th, I'm going to update this right here. On the 15th of August, we pay an invoice with Matic tokens. So we know our cost basis is for 1,000 tokens is $877. Our accounts payable was $452. This was the US equivalent, let's say. And we agreed to pay 500 Matic. On the agreed upon date, this was a sufficient amount to cover this. There's probably some volatility from when we actually paid. So we would record, based on our cost basis, we would record a reduction to our asset account of the 500 Matic at the initial price that we had for our cost basis. The price of Matic is now 0.85. So we have a loss on our digital asset difference. And then we have a reduction to our accounts payable. So then at the end of the month, so what I do at the end of every month is I revalue all of my digital assets. So this takes the cost basis or your purchase price, and you revalue that to what your market price is at the end of the month. And then I'll just reverse that the following month, and I'll just book a fresh one the next month. So here we now know that we have 500 Matic because we paid 500 for this invoice. The price at the end of August 31st, it's gone down even further, so it's 0.81 now. So now we just record a unrealized loss on our digital assets. So because we still are holding them, this is an unrealized gain loss. We'll reduce the carrying value of our digital asset amount, and that is our mark to market at the end of the month. Personally, I only have one line item in my balance sheet for my digital asset account. I have all the underlying information. I keep that within my crypto tracking software. So I just keep everything clean. I make this one entry actually for everything, and I do that using CryptoWorth, which I also have a video showing a breakthrough of or a walkthrough of that. So very simple situation. Just want to go through the basics and make sure we're all on the same page.